And I want to dial back to what happened starting in year 2001 going forward in the housing market. For 6 years, the mortgage lenders, the banks, were involved in a variety of illegal practices and were making loans just to anybody who was breathing, anybody who had a pulse. People were allowed, with no money down, to buy perhaps even 10 houses that they never occupied. At the same time, lenders were making what were known as 125s. So you took out a mortgage and you owed on it, but you wanted money. And banks around the country and non-bank lenders, mortgage companies, were making these 125s where if the value of your home was, let's say, $100,000 and you'd already borrowed $100,000, they would still lend you another $25,000 against it. So you were upside down on your home. And the whole theory was home values were going up, so the lenders wouldn't get hurt because even though they had uncovered equity, negative equity, that eventually it would be covered and everything would be fine. Well, it wasn't fine. Because then we hit 07 and all the banking scandals came crashing down, demolished the housing market, led to the housing bust, led to the Great Recession that took years and years and years for us to get over, basically 8 years. And now the weirdest stuff is happening. A lot of people who were in those homes where they had a first mortgage, then they had one of these scuzzy second mortgages or home equity lines of credit, reached accommodations with the lenders, and they came up with payment plans and concession plans and all this. And people who were upside down in their homes and had trouble paying did not get foreclosed on. There were plenty of people who got foreclosed on, but there were people who worked things out with the first mortgage lender. Second mortgage lenders, a lot of them went out of business. And so those loans went quiet. And people, all these years later, 10, 15 years later, suddenly, out of the blue, are getting foreclosure notices. Imagine that. So who are they getting foreclosure notices from? Wall Street is buying up paper, buying up these old, dormant second mortgages, buying them up for half a cent on the dollar, penny on the dollar, 2 cents on the dollar, whatever, knowing that they had a security where they could go after the person's home. And there are law firms now that out of the blue are going after people, threatening to foreclose on them or foreclosing on them for those long ago home equity lines or second mortgages. Now, legally, they are owed. The amounts owed on them may or may not be close to accurate because they bought line items. They bought basic information on these loans. And you've got to hire a lawyer now to defend yourself to not lose your home because the imputed interest charges and late fees and all that can be gigantic on these old, forgotten about home equity lines of credit or second mortgages. And so it is past ugly. And if you get some kind of weird letter where you've stayed in a home and now they're demanding payment or you're going to be foreclosed on, you can't throw it away. You can't ignore it. You can't act like it's a mistake. You've got to go hire a real estate lawyer to defend you in this. And you want one who's got experience with this because the first thing will be prove it. Prove the amount you came up with. Prove all of that. And if ultimately they're able to prove it, then believe it or not, you will owe that money from so long ago. This is not a happy story, but you got to know that is the actual thing that's happening. I'd seen some things about it, and then I saw a long-form story in the Wall Street Journal about people who've been current with their mortgages. They've been fined for years and years and years. They've been paying on the loans. They thought they were close to owning their homes free and clear, and now they may actually have their homes taken from them in these foreclosure actions that Wall Street decided is the next place for them to get rich.